morning, everybody. Today is January 31st, 2020, and I would like to talk to you about the current stock market situation and what you should do with your money. Right now I'm driving, obviously, but when I left my house, Dow Jones was down around 450 points, and I actually executed a couple of buys on DIA, which is ETF that's being that basically matches Dow Jones Industrial Average. In other words, it's an exchange traded fund that invests into 30 most prominent US companies, or one of the most prominent US companies, since it doesn't have Facebook and Google inside of it, but or Amazon for that matter, but still covers in a pretty kind of wide range US economy, from pharmaceutical companies to technology companies such as Microsoft and Intel, and consumer related companies such as Procter & Gamble. So I consider that the stock market is still in great shape, and you should, instead of being scared by the current sell-off on the stock market, consider it as a great an amazing buying opportunity where you could acquire a lot of good stocks at discount prices due to the psychological effect of coronavirus being detected in China and you know, spreading a little bit all over the globe, but in a very controlled manner. In fact, today and yesterday there were like a lot of news that came out that actually said that a lot of airlines now will stop air traffic with China, meaning that some companies will completely terminate the flights to China until like end of February, beginning of the March, or some of the companies such as the Delta Airlines and American Airlines, I think they're reducing the number of flights going to China by 50%. So also there's a lot of news for the companies that surround China and have a railroad basically, you know, the traffic with them. So they will stop trains going to China and you know, trying to cut the spread out of this virus. So meanwhile, obviously some of the companies will suffer from lack of business, such as Starbucks, such as Disney, such as McDonald's, because a lot of people that actually go to this type of crowded, I would say, places in China, you know, they just the government says do not gather in such you know, small crowded places, because chances are that you could actually pick up the virus from the air. So these companies obviously would suffer, their earnings will suffer, their revenue will suffer, but I would say 90%, maybe even 95% of companies, yeah, that are being traded in America, you know, their business is mostly focused in the United States. And if they do have some operations in China, those operations are more manufacturing type of operations, such as Apple and Intel, that manufacture some of their products overseas in China, but you know, they don't really have kind of like retail operations or large retail operations in China, so that they will greatly suffer from sales decline. Especially most of these companies have pretty extensive online operations, meaning that if you you know, scared to go to the Apple retail store in China, you could obviously if you're scared, you could always obviously order Apple products online from Apple website in China, for example, and this would solve your problem in terms of acquiring Apple product if you really need it for your personal use or for your business. So the current sell-off is, I think, mostly a psychological sell-off, and as news continue to flow, and we will see that the virus is contained and controlled, and the spread of the virus is being narrowed to just a few places in the world. I think people will become much calmer about the business, about this virus, and that would evaporate most of the fear from the stock market and from the people's heads. So I'm considering, not considering, I'm actually buying the market right now, because I see that it does present very good opportunities at this point. However, volatility is pretty high, so if you do place orders for any kind of securities, try to put limit orders, preferably at the lower bound of your acceptable corridor for the stock price or for ETF price, meaning that if the stock is being traded between, let's say, $100 and $105, don't be too excited about the sudden sell-off, meaning that you could buy it right now and lock in a great price, put a limit order at $100 a share, for example, and just wait, and I'm sure you would be able to get it at your desired price. So thank you for your time, and good luck trading.